Hey, good evening, guys. Ken at Tortoise Capital. This is the Foundation's Q&A check-in for October 5th, 2023. So there was a question in the pre-session about where to go for like live coordination and whatnot, and is Campfire any good for that? So if you're in Foundations, you should have received an invitation to Campfire. Campfire does what it does very nicely. What it does very nicely is as an asynchronous discussion board. Think of it as a bulletin board. And what you can do on a bulletin board is you can search like 7 years of archived messages. So what I want you to do is go to the search bar in Campfire and just type the word or the letters 5DD, and what you're going to see is about 20 pages of references over the last 7 years. And every one of them that has a little box on it that looks like that is going to lead to a case study that you can double click on, and you'll see a case study about a 5DD trade. In the same way, if you go TS, you'll get triple screens, WO washouts, WMB3, you'll see that pattern. You'll see the 551W, you'll see channeling, CH, you'll see overreaction. So you can see the evolution of the sniper if you just type sniper, or if you type the keyword owl. If there's a keyword that's in our glossary, you can type it in there and you're going to see every reference to it over the last 7 years. But really, for the swing traders out there, if you want to see all the archives of all of the swing trade patterns over the years, it's the code. So you would see like 5DD 20200415AA. That's .png. So that's the standard file nomenclature in Campfire. And you know that that's the standard naming nomenclature in Campfire because when you go to Campfire and you go up here by the search button, I tell you that right here, and I say search is your friend. So if I were to type 5DD in here, let's hope it works so I'm not embarrassed. There's all of the, every one of these that has a little button on it will open up and hit you a 5DD setup frame. And the same thing with all of the other patterns. So there's a good reason to have a standard nomenclature. If you see a quiz, that turns out to be amazing. That's actually, I would say, an online workshop. If you type the word quiz, let's see how far back that goes. I used to do a lot of these where I would, oh, there's a lot of quizzes right there. If you go to 2022-0119 EWZ swing, you're going to see something like this. This is a setup, and every one of these little numbers refers to some markup on the screen, and there's an answer for each one of those, and also A, B, C, and D. You should be able to explain what every one of those things is referring to. Like, here's an entry, here's a PSAR flip, there's my initial risk, here's the move to no lose plus dinner for two. And now, at this moment, at A, where would you put your stop? Would you keep it at 3? At 4, which is the Bollinger Band mean? At 5, which is the midpoint of this little cluster of support, but which is also the upper skin of the dragon extended on the same angle, and say, well, if I put it at 5, and price is right here, then at 5, what I'm doing is I'm using the northern skin of the dragon as my trailing stop. 4 would be the spine of the dragon. 2 would be the southern skin of the dragon. 3 would be, I would leave it in place at the no lose plus dinner for 2. 7 would be just below the Z2. 8 would be the bar low at that point. And then at A, you could say, would I be willing to add a second position here? Would I add it at B, which is the top of the dragon? And so at B, I've taken an emerging dragon on the dragon. At C, I'm getting the peak of the RL10, and at D, I'm at Z3. So that's a quiz which says, where do I add my second position? And when it gets to B, where would I put my stop? If it gets to C, where do I want my stop? If it gets to D, where do I put my stop? So this is an example of a quiz, and every one of these numbered increments turns out to be something that you should be able to explain why I'm highlighting that. And then the lettered indicators are, why did I make that a letter? What is happening at A, B, C, and D? Well, if I could get an intern, I would have them go through and download every one of these quizzes. And oh, by the way, there are multiple pages of these. There's probably 200 quizzes in there. And then we would actually have another good home study workshop, which I would give to you for free if you want to do that work. I just haven't had the time or the motivation to do this yet. So each one of these uses a standard file nomenclature, so you can tell what day of the year it was, what pattern, and so forth. Like this one is, let's see, Quiz 2019 11/18 Caterpillar Swing Exit. So that means on November 18th, 2019, we exited Caterpillar on a swing. Why did we exit right here? And so the answer would be, you could actually say, why did I exit here on this one? And why did I exit here on that one? What's the explanation? So you could figure out that quiz, share it, get feedback. A good way to do that would be to get 3 or 4 guys in a circle, take a look at that, and then discuss what are the things that could be learned on that. And you'll get a lot of value out of that, and then ask me and I'll answer it. And then you can compare your answer to my answer, and now you're developing the coach's eye. So when I say quiz, or when I say search is your friend, I mean it. So you come up into this thing, you hit quiz or 5DD or whatever, you're going to get all sorts of archives. If you wanted to see the evolution of the sniper, I don't know why you would, but you could. These are all the discussion points associated with the sniper. Here's one that Constantine did, a stats final on his sniper version. So Constantine is a prop trader that trained with us in the foundations course and in creativity. He's now trading a $2 million proprietary account based on proving that the sniper worked for him in that prop fund. And what he was doing with it was trading just a couple symbols that he was expert in, but using our pattern. And he's got a 2/3 win rate, and his average win, his average win was, let's see, in a 2-month period he returned 40%. His average winner was gaining him 0.36%. His average loser was minus 0.08. So here was a guy that had a 67% win rate and had a 4.5 to 1 win to losing ratio. So 2 out of 3 times he was winning, and when he won, he got 4.5 times. So that's a 9 to 1 coin flip over almost 200 trades, and that earned him a $2 million account at a proprietary trader, and his SQN was 6.7, and he's collecting a lot of money by trading other people's money by going through their certification process and just trading with the sniper. So I say that just to say, here's Constantine's rule set. If you're interested in that, if you click on that, you should be able to. Well, anyway, if you click on that, you can download. It's in an Excel file. I'm not going to monkey around with that. Here's an example of one of his trades. This is the trade performance of his 30-minute trades. His portfolio return percentage. So anything that Constantine puts in here is kind of worth looking at. Let's see if I can find one of his sample trades. Oh, here's one. He got short here, exited here, got long here, exited here, got short there, covered here, got long. So he smashed this. This is in the U.S. oil, the cash market in the futures, on 5-minute charts. So he liked trading oil and gold, dollar in the currencies, and he found that setting really worked well with the PSAR flip, and that, like I said, earned him a $2 million account. The main point I want to make here is that the search is your friend, and the point I want to make is that so Campfire does what it does very well. Let's see if I can draw this. Campfire as an asynchronous searchable archive is very good. You can actually exchange live messages on there if you both happen to be in the chat room at the same time, and you'll see a lot of that. More so in the older days. It is what it's not great at is live simultaneous trading, because you have to upload, you have to type, you have to upload, and what you're far better off doing is study Campfire and the Foundation's Q&As and traders' introductory notes in Foundations, and then find somebody that you align with, and then host your own Zoom, because then you can record it, you can share screens easily. It has a live chat, and you can process that. You can have AI do a timeline for you. You can edit the video and smash it down into something useful. So Zoom is a much better way to go about doing that. How do you find somebody to trade with? The best way is to come in here on the Q&As and look at who's asking good questions, or talk to people before and after, and get to know each other, and develop your own little accountability group, or post a note in Campfire, say, hey, I'd like to have an accountability partner, and I'll announce that in the live chats in the nightly strategies and tell people to do. You can also post a note on Patreon where you should be a subscriber, and just put a note in there and say, hey, I'd like to, this is my background, I'm interested in working with people. So for Jonathan, look for your invitation to Campfire. Check in your spam folder. If it's not there, let me know and I'll resend it to you. So yeah,
I
Campfire.
appreciate it.
Yeah. So,
Thank you.
yep. Okay, so Jose asked this set of questions here. Now, if you were looking for somebody to partner with, and I'm going to read this to you, you might talk to Jose or Greg or Brian. The other thing you can do is take a look at the charts in Campfire that foundations traders are posting. And if you see somebody trading a target in the time frame that you like, and you like what they're doing, and you like the markups, and you like the way they are responding to my feedback, and you're listening to my feedback about their charts, you know who's going to be a good accountability partner for you? A guy who's willing to post his charts in Campfire. That's why you should post your charts when you're ready in Campfire. Get feedback and put a note on your own chart that, hey, I'm interested in accountability partner. Post your trading plan. George just posted his trading plan, and I have some comments about that tonight in the live chat, and then that becomes a way that you can start building your collaboration together. So, Jose asks, hey, right now I'm only trading in the afternoon because of my job. By the end of the year, I'd like to be trading the opening as well. Before they do that, I'd like to learn your process more clearly, such as... Oops. Clean that up. From your watch list, how do you choose the best candidates to focus on? If you listen to the nightly podcast, there's 1,000 sessions that are recorded on Patreon where I review the nightly report and I talk about the things that make it to my watch list. There's also on the home page at tortoisecapital.net a couple free videos. One of them says, how do I prep and how do I manage the trades? There's also a lesson in foundations that talks about how do I create the watch list. Briefly, what I do is I take a sample of symbols. I have a sort of like a master watch list of about 60 symbols. Well, why 60? Because 60 gives me enough ETFs, large caps, and select mids and small caps, so that if I have the world market model over here governing the entire world, I got things in Asia and in Europe and in the US and in Latin America, and I, as ETFs, I have narrowly constructed commodity ETFs or stylistic ETFs. I have individual countries in those regions. I have individual stocks. I have sector ETFs. I have a logic chain that goes from the SPY to the Qs for technology. And then in technology, I'm interested in semiconductors. And in semiconductors, I'm interested in Intel, NVIDIA, and Texas Instruments. And so I construct logic chains out of SPY to XLB for materials, to XLF for finance, to XLP for staples, and to XLK for technology, along with QQQ. And each one of those leads me to individual stocks. And then from that, when I see my 60 member watch list on TC2000, and I sort it by percent change from yesterday, at the top, I see the things that are moving the most, and at the bottom, I see the things that have been slammed the most, and I concentrate on the things that are at the extremes because they're the ones that are moving the most, and from those extreme conditions come extreme results because they're already in play. Now, that's one of the ways that I focus from my 60, and that has to do with current performance relative to yesterday. If you go to the prep video, which is about 11 minutes, it talks about my step-by-step process of how I go from the close to the open 16 hours later. And it talks about how I start with gratitude and forgiveness, and then I go through a systematic way of finding 3 different sources of candidates to prep. And then when I find that list, then it describes what I do to prep them and how I get ready to trade. Well, there's 3 sources of targets. There are old open trades, I should say open trades. So if I have an open swing, I'm automatically interested in that one for tomorrow. So this is going to be the open for tomorrow. If this thing is already open, I know I'm going to trade that tomorrow. So if I have not yet hit the exit on an open swing trade, it's automatically on the list. Check or hold. Then there could be new swing patterns. And that is, hey, today there was a new signal for a 5DD, a triple screen, an overreaction, a channeling, a washout, a 551W, an auto framer, or a max pain range compression. Any one of those that is a new signal is a candidate to prep for tomorrow, because that has a higher than normal degree of probability of making a larger than normal move. What that means is that swing trade patterns from the mechanical systems are compound critical states, so I will prep those. The third source is old reliables, and these are things that I have traded for 2, 3, 5, 10, 20, 30 years that I'm always ready to trade, such as Mexico, Brazil, Alcoa, Devon Energy, Intel, Microsoft, Tesla. Another name for these is frog champions. So we went through a research process and we found all of the symbols that outperformed on mechanical frog entries regardless of market condition. And the ones that were positive expectancy through all market conditions and were reliable intraday traders are these frog champions. So even if they don't have an open swing, a new swing, or a new swing system, I'm always ready to trade those no matter what. So there are 3 sources of things that make it to my prep list. and I prep every one of those. And then those things are on my watch list when the market opens. And every one of them has a mechanical entry long and a mechanical entry short, which is based off of yesterday's high and low, because this is the yellow zone. And what I have TC2000 set up so that if it opens inside yesterday's yellow zone, which is, or yesterday's range, which is today's yellow zone, and then it breaks out, that gives me an alert in TC2000, and then that calls up, with a click, I can call up the chart, and I can see the trade frame, and I can make a decision to trade it or not. And that's for all mechanical longs or shorts, for everything on my prep list. So I get alerts when things are moving. The second thing that I'm looking for is right at the open, is I'm looking for the biggest gaps, because we know from the gap statistic and the gap study that a large gap equals large move today, normally. We just don't know which direction it's going to be, but all I need to do is have an alert. Now, guess where you can see the large gaps? When you call up in TC2000 the percent change, it measures the current price against yesterday's close. So if there was a huge gap up, this thing is automatically in the top performers, and if it was a big downward gap, it's in the bottom performers. And so just from the gap, I can tell you which ones I'm focusing on, and then I have an alert for every symbol that has a large gap. And that's based on the gap stat. And so that's all coded in TC2000. So I already have my watch list coded and alert and ready to trade. And then what I do is I'm trading on the 30-minute charts for everything on my watch list, and then selected maybe 2 or 3 symbols, I drill down into 3 minutes, and I try to trade those 3 little symbols early, and then maybe that'll be the one that's a big move. And if it's not, I get rid of it and pick something else that is working on a 30-minute chart. So from the time of the open, there might be 1 to 3 symbols that I'm trading right after the OR3. And that's going to be based on a gap or an alert. And then I will be trading that in the first 30-minute bar. Now, by the end of the first 30 minutes, I'm now into quick frog territory, and I have alerts set up for that. But I can also start looking at the 30-minute chart and say, well, here was the bar, and here's the, maybe this was the PSAR from yesterday. And this thing now maybe just breaks north of that. Guess what that's going to give me? An alert in TC2000 that I got a PSAR flip. I can double click on it. I can put the MMRB on it and determine if I want to take that in about 5 seconds. So the combination of 30-minute to 3-minute charts and my watch list is how I find the movers quickly. And all I'm trying to get is 1, 2, or 3 movers for the 3-minute charts. And then while I'm waiting for them to do something, every 30 minutes or so, I go into my my swing hybrid portfolio, which you see me update every night. It's about 30 symbols that really trade well on 30 minutes. And I've got a dozen things that are working on that. And in any 30-minute segment, I might have to make 3 to 5 decisions. And I can make those decisions in 10 seconds. Because if the PSAR flip looked like this, let me put that on, let's see, and it's going like this, and then it starts rolling over, and I see it coming down, and the edge of the dragon is here, I can see that I've got about probably 10 to 30 minutes to watch that thing to see if it's going to drift down and hit the exit. And I can put that order in the book and just leave it alone. So in about 5 seconds per slide or per chart, I can evaluate 30 charts in 5 minutes. So every 30 minutes, I spend 5 minutes updating those 30, and then I have 25 minutes to monkey around with the 3-minute charts and see what else is going on. So that's how I find the movers and how I decide what things to focus on. What else do I do to focus? The first thing I want to say is, you asked me a set of good leading questions, and what I do is I look at that as a set of leading questions that reflect what you think is important. So now, acting as a coach, see, I'm not interested in you trading exactly the way I'm trading. I'm interested in you in adapting what I'm doing to the way it fits you. And what that means is you've got to start with your assumptions and your beliefs and your skills, and then learn to adapt those in the direction that you want to go to improve performance. And if I'm trading over here with assumptions, beliefs, and skills, and you see something that you think you can incorporate, you need to bring that over, study it, make it your own, and then add it to your trading plan, and then try it out in your own thing. So I don't want you to watch my screen and then try to do what I do on your screen, because now you've given me control of your brain. And if I get hit by a car or I have another heart attack, that leaves you unprepared. So I'm interested in you in generating your internal expertise. The way you do that is exactly the way you're doing it, asking me these questions. Now, as a coach, I would say, you think volume is important. For each one of those, I would say, why do you think it's important? What's the source of the belief? What's the evidence for the belief? What are the rules that you use? Or why do you think that it might be useful? Okay, so for me, volume doesn't matter. Why? Because I have selected targets that have massive volume every day, and little fluctuations in volatility, or volume, fluctuations in volume don't give me any actionable information, so I disregard it completely and simplify my life. That simplification is a trade-off that comes at a price. That means I'm not doing anything trying to figure out volume signals. I spend my time on volatility. Like, I'm much more interested in looking at things that are abnormally quiet or abnormally volatile from the previous day and focus on those, because they are much more likely to give surprise moves. And then it doesn't matter how much volume is there, is because when they make a big move, it doesn't matter how much volume it was on, that will attract volume in response to the volatility. So volatility moves first. That's why I study VIX, because that front runs all large volume moves. Gap percentage, yes. As I just explained, large gaps identify big movers. Sector gaps, yes. Sector ETFs that I follow, if they have a large gap, then every symbol in that sector has a chance to have massive gains either directly because they're causing the gap or in response to the sector, because you have market leads to sector leads to target. And so if the sector has a big gap, it stands to reason that everything in that sector might respond to the sector movement. So yes. Daily chart breakout and breakdown, I would say patterns. There are 7 Generation 1 patterns in RLCO Generation 1. And then in Generation 2, there are supported spring crossing, collapsing dragon, emerging dragon, Kata 2, owl, Z3P, Z3 channel breakout, every one of those is a compound critical state that is actionable, because there is a frame and it's in here, and when it breaks out and the final criteria of SSE has happened, that's a reason to get long. So I can stalk it until the pattern completes. How do I do that? Well, in TC2000, if I'm looking at the SSC, it has 3 different patterns. The owl has 2 more. And as each one of those things occurs, TC2000 fills it in. When all 3 of those fire, then the SSC pattern fires, and I get an alert. And so that is a way I automate target identification. It's the radar screen in TC2000. You can do that in Thinkorswim with the package that Phil and Griff do. You can do it in TradeStation with the TradeStation bundle. And a couple of the guys have put together, it's looking like a package for TradingView that I'm getting ready to review. And so every one of those things is a pattern that has a reason to get long and has an appropriate execution risk, which tells you when that pattern fails, and then it may or may not lead to a stop and reverse. For example, an SSC that has this trade frame that has a stop at the belly of the RL10 that's using an MMRB, you know that the upper limit of that thing is 9 R10 boxes, in other words, 9 of these. If this was also the low of the day, you know that there's 9 of those up to a range stat. And you also know that if this thing fails, that you are supposed to execute a collapsing dragon. If you are trading an SSC and it works, and then you exit, and then it does this, you now have a Kata 2 where you have a swing low, a higher low, and you know that this is an emerging dragon. You know that this is the pocket right inside here, and that you can enter anywhere inside of this little pocket and you're going to have a Kata 2 entry. What I like to do, my preference, is that you have a dragon, and maybe that was the dragon exit, and when and it starts to roll over because of the failure, and when the RL10 comes back through and breaks above the dragon, you have the RLXD, which gives you an entry here slightly sooner than the emerging dragon. And that gives you a Kata 2 entry. If you wait for the dragon to curl up and the RL30 to roll up. At that moment, you now have the extra two conditions of the owl, and then an appropriate stop for the owl is below the belly of the dragon, and you get some kind of entry up in here. And then you know that the owl entry is there and your wrist box is here, and you know that you're supposed to get short on a failure of an owl. So the daily chart breakouts and breakdowns inform decisions of when to get in, when to get out, and whether or not to stop and reverse. And each one of those patterns in generation 2, SSC, Kata 2, collapsing dragon, emerging dragon. I only teach you 3 of those in the foundations course because that is the minimum mission essential rule set that allows you to have a baseline of low risk trading. Now, why do I say that? Because what I'm trying to teach you is how to get started. I'm not teaching you in the foundations how at the open, if you get an opening here and the OR3 looks like this, the opening range 3 candle, what we do in the advanced course is we make that the OR3, and we are prepared to go long here in the next candle or whenever it breaks out of this yellow zone. We treat that whole thing as a yellow zone, and we are ready to go long from here and short from here. And the size of the wrist box is going to be an MMRB. And sometimes the MMRB is larger than the OR3. That means this was a quiet OR3. Sometimes the MMRB is smaller than the OR3, and this was a volatile OR3. And so I can get long here with a wrist box, and then I can get my risk out of that in a hurry. And now I can be trading in the opening 30 minutes. And this is a variation of the hybrid frog technique, which we teach in the advanced day trading course. Now, I don't teach that in the foundations course, and I shouldn't have explained it to you here, except that that's where you see me covering that every night in the sniper trade of the day, because this is integral to sniper trading for candidates that are sniper targets, which is a special form of watch list for things that have met certain criteria based on trade location over the last 10 days, 30 days, and 150 days, and the volatility based on 5-day relative volatility. When criteria are met, they become sniper targets. Sniper targets become things that I'm willing to use on the OR3. That is its own separate workshop. But I feel like I should explain that to you because you're asking me about what is the how do I choose the best candidates to focus on? Prep, target lists, alerts, patterns, gaps. All I'm trying to teach you in the foundations course is the minimum essential list, and that has to do with 3 patterns: supported spring crossing, collapsing dragon, and Kata 2. And here is why. From the opening, we are going to wait. We're going to start with the SSC. And what we have to see for the SSC is a move from the opening that meets the criteria of a harsh winter. And that means it has sold off enough that it's 1.5 frog boxes, and or it's in the winter on MACD, Four Seasons, and it's outside the Red River. That constitutes a harsh winter. What do I mean by a harsh winter? What I mean by a harsh winter is a move that is abnormally large. It's an abnormally large, fast move to the downside, and it tells us this thing is in play, that it is an exceptionally big move. And then what I'm looking for, so that's criteria one, harsh winter. The next thing that I'm looking for is a reversal in the RL10. And we treat the RL10 as price. A reversal in the RL10 is always a V because of math. And that's the second criteria, that the slope of the RL10 is now up. The next thing that I'm looking for is the harsh winter to turn to spring. The fourth thing that I'm looking for is RLXD. The regression line has crossed over the dragon. It's now on the other side of the dragon, which means it just entered the pocket, because there was some high up here that we think it's going to get to. And then the fifth thing that I'm looking for is the PSAR to flip. When the PSAR flips, it flips mathematically to where the RL10 reversed. And it does that is mathematically because we are using the RL10 as the value of price in calculating the PSAR. So when it does flip, when the RL10 goes through the PSAR, then the PSAR flips on the next one, and then that gives us the size of the execution risk. And that's usually pretty close to an MMRB. So that tells us that we enter here with a risk box at the bottom, and then if that fails, I am instantly into a collapsing dragon to the short side using the same size risk box, and then that is my entry to go long again. And so I'm using one constant risk box, which is the space between the two PSAR dots. The two PSAR dots would be here and here, and that constitutes the size of the risk box. Now, so the three patterns again: SSC, collapsing dragon, and the Kata 2. So we have a harsh winter, the SSC has formed, we have a risk box, we have a long entry on the SSC. Our job is to get our risk from here to no lose plus dinner for two. Now our risk is out, and we've locked in enough of a gain to take our wives to dinner. No lose plus dinner for two. Now your trading plan describes how you're going to adjust those stops in the future. You're going to see in the Foundations course different strategies on how to do that. I'm going to tell you, keep this one in place until the PSAR, wherever it is now north, and then when you get three dots above the PSAR, start using the PSAR. or trail 1 MMRB. Either one of those is acceptable. So you have an SSC long. You know what to do when it's minimum successful. You know what to do if it's starting to work. And then you know what to do if it fails immediately. You get short when it goes through here. What do you do if it fails into this yellow zone? Nothing. You do nothing because this is noise. The only time you can do anything in here is if you're using the trailing MMRB. Like if it went up this far and then failed here, you'd exit right there. But if it moves up about 0.4, you should be moving your stop to no lose plus dinner for 2 anyway. And then then you wait for the PSAR to catch up, and then when you have a full box, then you start trailing it again. Now, harsh winter, SSC, wrist box, whoops, sorry, collapsing dragon. If that fails, you're short, and then your job is to get your risk out of there as soon as you can. Same reason. The last pattern is the Kata 2. The Kata 2 occurs when this thing rolls over and you take an exit, which gives you a gain. You cashed that much of a winner. And the RL10 has come down. It has crossed the dragon. And that's why you got out. And now the RL10 improves and crosses back over the dragon. And now you have the criteria for a Kata 2. What is the criteria for a Kata 2? First, you cashed a successful SSC. You had a winning trade and you exited. And it crossed back above the dragon and it made a higher low compared to the first one. And now you get long here. Your execution risk is the bottom of the RL10, even if that is wider than the MMRB, and a lot of times it is. This is your execution risk. This is your MMRB, which is your standard risk box. That's going to give you a 1.0 execution risk, but you execute on the PSAR or on the RL10. So you're long, and then your job is to get that to no lose. Now the SSC can sometimes lead to 3 or 4 successful Kata 2s in a row. So what is Kata 2? Kata 2 is nothing more than a rule set to reliably buy on dips as long as you continue to get higher lows. You must see a higher low in the RL10 and the Dragon in order for this to be a Kata 2. If you ever see an SSC that does this, and then you get your Kata 2, and then that thing rolls over and you get your exit anywhere, if this ever goes below this and gives you that, this is no longer, even if that crosses the Dragon, this is no longer a Kata 2 that we believe in. This might be enough of a sell-off to create a new SSC, but it had to be a significant sell-off in order to justify getting long, because this might just be, if this was not a harsh winter, this might just be drifting. So, in a nutshell, I just gave you the rule set for SSC, Kata 2, and Collapsing Dragon. Those are the only 3 patterns that I insist that you learn first in the foundations, because you have essentially this. This entire cluster is one complex set of signals with 3 different responses. You have the initial plan, you have what to do if it works, you have what to do if it fails. Our most favorite pattern is number 1, the Collapsing Dragon, because when this one fails, it fails large. But our second favorite pattern is the Kata 2, because you can get 5 to 7 of those in a series. Even if you miss the SSC, you can always, at any time of day, pick up Kata 2s on something that sold off and then has started to reverse. Our third favorite pattern is the SSC, but it's the first one in the series. And here's why. If the third favorite pattern works, it leads me to patterns that I like even better. That's good. But if it fails, it gets me into the pattern that I love. That's having your cake and eating it too, for free. Check or hold. Now, let's see, we're getting close. Once I'm in a stock, how do I know when to hold to the close? If it's intraday, never, unless it's 1 out of 5 that's greater than 2R, and it's going to be one of the 1 to 3 symbols that I convert from an intraday trade to an overnight trade. That's if it started off as a day trade. If it's a swing trade, I hold it overnight if they haven't hit the swing exit yet. And that's defined in the mechanical swing pattern. But if it's only 1 out of 5 times do I convert a day trade into an overnight trade, and then I restrict that to very few symbols that are performing the most. And you can watch that in the nightly podcast when you see how many times I exit those 30-minute hybrid swings before the close. It is rare for me to hold it overnight, and I always have market's money in hand, or it's one of those few times when the market and the sector and the symbol are at a critical state, and I just made a lot of money on it, and I feel like there's a chance to take advantage of a gap the next day. And that's a coin flip. So I don't even recommend ever even doing that. Is the thought process based on visual? It's based on math, chart pattern, money management, success for the day, market and sector conditions on a swing basis. Will I ever offer a live trading service where we have morning meetings to this whole idea here, by the way, I'm going to read it all. Could we have a live trading service where we have morning meetings or the night before to analyze potential candidates and trades for the day? I'm already doing that every night in the Nightly Strategy podcast already. Screen sharing so that we can see what you're seeing. I'm going to say no, because that will distract you from learning what you should be looking at and setting up your own screens. But I also say yes, because for 12 years, we did live trading workshops out here in Kansas City. And what we did was on Friday, Saturday, and Sunday, we briefed our research plans, and we talked about the trading plans that we were going to use on Monday through Friday. And we did 5 days or 4 days, sometimes you didn't do Friday, of live trading. And we had nightly sessions, and then we traded all day, and we recorded lessons and insights and short videos. And then we had an AAR, an after action review at the close of the day to review our lessons. And then we had a planning session and reviewed the nightly strategy. And then we put together our trading plans. And what we did was we broke down into accountability groups of 2 to 3 people, and each one of us was focusing on certain things. And then we shared those trading plans so that when we started trading in the morning and we had it up on the big screen, we were monitoring that, and then everybody was trading at their own little desk. And then we would sing out ideas, and we would call up ideas on the big screen, and we recorded that. And we have about 300 hours of live trading workshops from those years, which I'm selling as a live trading workshop. So you can actually see that, just the trading case studies that were excellent, instead of, those 300 hours of recordings, that was probably out of 2,000 hours of live trades. And we necked it down to just the case studies. And I've reduced that into a bunch of case studies that show the best ideas, including little mini master classes. Now, could we do that again? Yeah, we could. I'm going to ask Phil and Griff, as part of the Kata 2 Challenge Plus, to take on the idea of doing a live Zoom workshop where we have a common frame and you're trading your home, but we also maintain a community room, and we can call people together to take a look at the big screen, but meanwhile you're trading your own screen. Here's the problem with that idea. The problem is a lot of people just want to watch what I'm doing and then just do what I'm doing. If I wanted you to do that, I would just take your money and trade for you and keep a percentage, because that's much more efficient than you trying to just mimic what I'm doing. Or, we can do that in swing trading by having a master and slave account where I make a move in a master account and it reflects in the execution. I don't want to go through customer service hassles and accreditation and compliance to do that shit. I'm 66 years old. I don't want to start doing that. However, Griff and maybe Bill Scheidt or somebody, maybe Constantine, maybe that's something that you want to do. But what I'm teaching you how to do is to internalize so that you can become your own actor, unencumbered by anybody else. So that when the market changes and you get information, that leads to your action, and then you can see those results and you can study those results and improve your trading plan so that you are self-actualized, and you don't need a guru, because you are your own trading coach and your own adaptive learning system. That's what I'm interested in doing. But this other thing as an intermediate, certainly. Now, I say all that, and I would say the live trading workshops, I'm going to release all those videos for $1,000, and there are hundreds of hours of case studies, and you can approximate this, because all of the ideas that we were using back then are what led to the way we're trading now. You'll see all the hybrid frogs, you'll see the generation 1 and 2 RLCOs and all that stuff. Well, where can you get that, and where can you get the bar by bar? Well, I'm going to tell you that if you're a Patreon subscriber, and I think you are, I want you to go to Patreon and search NSPA Night, which stands for the Nightly Strategy Podcast Archive, and it will come up with this: Nightly Strategy Podcast Archive 2022-2023. There's also an archive for 2020 and 2021, and this is a combination of 2022 and 2023. That's over 1,000 archives. And what you're going to see on that page is the following thing. You're going to see at the top, well, at the very top, the link to this chat room and the password so you can listen to the nightly podcast and all these Q&As, and that's never going to change. And then you can see these are the bundles that the boys are offering for TC2000, TradeStation, Thinkorswim, and when we get done with TradingView will be on there. Jeff already has one, a modified version at TradingView. You're also going to see my trading courses here. And what you're going to see on that link is 2 years of archives of the best of the live trading. And you're going to see the bar by bar workshop that we did during COVID, which is where this live dynamic trade framing occurs, which I gave an example of last night. And both of those courses are on sale. If you click on that link, or you click on this link, on below this page, you would see the archive of the nightly podcast starts from here, and it goes back 2 years on this page. Every nightly podcast is covered here. And at the very top of that is the bar by bar workshop on sale for 50% off. Now, when you ask me where the link is to buy that workshop, that tells me that you don't know that that archive exists. So what you need to do tonight is find that archive and bookmark it so that you can stay current with all of the nightly strategy podcasts. Every one of these nightly podcasts has the 30-minute hybrid swing portfolio discussion. And that is a workshop all of its own. I'm showing you how I am trading the bulk of my money every night. And if you just pay attention to that, you're going to pick up all of these patterns that I'm teaching you in the foundations with living practical examples every night. I go through 30 charts every night just showing those patterns. And then that will help you see the SSC, the collapsing dragon, and the Kata 2, and all of the rules about when to move your stop, when to exit, which ones to carry overnight. That answers all of the questions that you just asked me for tonight's Q&A. So, this is a bonus workshop for you that can be found on Patreon. And as long as you're a foundation student, you have access to all that stuff and all the reports for $25 a month forever. That's the best deal you'll ever get in trading anywhere, I believe, if you're interested in my stuff. Now, let me show a few other things on that same page. These trading courses are how you get the foundations, the creativity, the live trading, the bar by bar. This is Griff and Phil Owl trading on the Thinkorswim platform. That's their bundle and their little Kata 2 system. You're also going to see some samples of some amazing presentations that came out of the Creativity 202 course, which is the best course that I teach. Now, in addition to those courses, there are these little courses that I call the Trader's Mind courses. And these are typically about $45 or they're free. And these are just, there's a bunch of them that are free. Here's how to read the daily and weekend reports, free. Mindfulness at work, strategy, leadership, team building, goal setting, resilience, focus, time management, listening, stress management, meditation, protracted coaching, true storytelling. Those are all basic cognitive skills for decision makers and leaders. Because I do consulting for those people that are not just traders and people who just want to think better, and that will give you plenty of very low cost lifetime access skills. Those all lead to those courses. Now, the reason I keep hitting the Creativity 202 course so hard is that has turned out to be a revolutionary course. And every one of these videos that's on that archive page, you ought to go listen to as a special mini masterclass on trading. They're just that good, and it gives you an example of the quality of stuff that comes out of the Creativity 202 course. So that's everything I want to cover for tonight. What I want to say is, this is a very good set of questions, and it shows me that you're paying attention. I don't care if anybody saw that link and they used the password and they got into the chat room. I don't care, because if they're doing it without paying me, then they're going to get karma and they're going to blow up because they won't know how to do this right. So payback is a medevac. And nobody's going to listen to this thing for 90 minutes and then see that and then say, now I'm going to get it free. I don't care. I'm 66. I just don't care. I went through those patterns very fast. This is not the only time that you're going to hear those. When you go through some of the other archives and the other Q&A sessions, and when you listen to the structured lessons of the Foundations course, you're going to hear that about 20 to 30 times in the next 5 weeks. I just guarantee it. You can't miss it. But repetition breeds proficiency. And the sooner you start trying it on and drawing your own sketches, the sooner you're going to start internalizing these patterns. And I'm telling you, that's the only thing you really need. Because once you master that harsh winter to the SSC, the Kata 2s, or the collapsing dragon, once you master that, you're going to be able to quickly figure out how to start doing the OR3. And then when it's a harsh winter, you're already going to be in that position for a massive win. Instead of waiting for that to happen and then react, you're going to be in it right from the beginning. And then when all of this settles down and compresses not to a sideways quiet channel, which we don't trade, but when it compresses to a Z3 pinch on the other end, you're going to learn how to frame that and play the breakouts. Guaranteed. But it starts with this intermediate position, the SSC, the Kata 2s, and the collapsing dragon. You should draw that pattern every night for the next 30 nights until you're sick of it. I have that pattern on a coffee mug that I drink coffee from when I'm trading. That's how important that is. The most important thing in the world is when the RL10 crosses the dragon. Harsh winter, bottoms out, crosses the dragon, you're long, there's your wrist box, and here's where you adjust your stop to no lose plus dinner for two. You should have a tattoo of that or emblazoned on your coffee mug. Maybe I'm going to do that. All right, that's everything I got for tonight. We'll get this published and posted. Hey, Greg, if you can turn back in on this and tell them I'll be ready at 8:45.